How much further can they go from here? How much of the good news surrounding the Strait of Hormuz and the optimism around it reopening completely by Friday, the president says, is already baked in to this price? So, Mike, how much further could we see this deterioration in oil prices, and how quickly?
Well, that's the key thing, Kaylee. We're subject to the nuances of war and to Mr. Trump. But the bottom line, the 10 on a scale 1 to 10 for crude oil is what does Mr. Trump need, the leader of the world's largest energy producer, a net exporter by midterms? He needs lower energy prices. I still fully expect him to get that, and natural gas has been a great guide. Remember, it did the same thing in 2023. It led the way down. It's down in the year, and I think by the end of the year, crude oil is going to be down in the year, particularly if you see what's happening today continues, a little back up in the stock market. Remember, it is a midterm election year, and stocks usually go down in those kind of years, and that's a key pressure factor for crude oil. But the bottom line for crude oil is I'm much more comfortable now around $75 a barrel. When it got above 100, it breaks stuff, and it brings on more supply from the U.S. Now they're around 75. The key theme to remember, though, is it almost always goes down to a low-price cure, and I think that's going to be closer to 50 by the end of the year.
Wow, that would be something. Remembering we were at $67 a barrel. I actually had to check this morning, Mike, before the war broke out on February 28th. I want to ask you about gas. We're at $4.04 today. Again, before the war, that would have seemed shocking, but we have seen daily declines, a couple pennies a day here, to where we're just now getting back down to about $4. I'll tell you what, I filled up for, I think it was $3.79 a gallon about a week ago in the state of Virginia. So you certainly can get below $4 pretty easily. But you've heard this reference a lot, the old elevator up and stairs down. Is that going to be the case for gas?
Yes, because we're into the driving season. The average gasoline price now is $4.04. If you look at futures, Joe, it should be down closer to $3.80. Actually, futures lead the way a little bit. But as we get through the driving season, I fully expect to head closer to 3 and below 3, potentially towards 2, because that's what it usually does. The key theme is what's going to be different to make it higher this time. And I think if the strait's cleared up after we've had that big pump in prices, it usually brings on that more supply and makes prices go lower.
Well, as we consider where all that supply is going to need to go, Mike, it's one thing for supply to meet just the kind of daily demand. But when you see a headline like we saw yesterday that the U.S. Strategic Petroleum Reserve is at the lowest level in nearly half a century, how should we consider the demand that may be inspired by countries such as the U.S., but others as well, looking at China, for example, who want to refill their stockpiles? Is that not a force that could keep prices more elevated?
It's a very bearish factor, Kaylee. Let's remember what the SPR was initially set up in the U.S. by President Ford in 1974 to cover 90 days of net imports. With Canada, the U.S. has a surplus running near 8 million barrels a day of crude oil and liquid fuels right now. We don't need an SPR anymore, except for nuances like this war and maybe hurricanes. Now, China needs an SPR because they're a net importer, but there's some estimates that they got their SPR up to 1.8 billion barrels, which would be 4 to 5 times the U.S. Now, they need it, but they've been selling out some of that because Chinese are the best commodity traders on the planet. They buy low. They filled up that SPR last year when prices are low, and they sell high like this year when Brent got above 100. That's just what they've been doing for centuries.